Good morning, it's Monday the 14th of February. Yes, it's St Valentine's Day, and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights. As always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets, and we'll then take a look in more detail at some of the bigger stories straight afterwards. So let's get straight to business. So let's take a look at the economic numbers being issued this week. And starting today, we'll get an update on GDP status over in Japan. On Tuesday, we'll hear the thoughts of the Reserve Bank of Australia from their last interest rate decision. Here in the UK, we'll get an update on unemployment. That's something we'll discuss in more detail in a moment. Tuesday also brings us the Eurozone GDP figures, German ZEW economic sentiment, and the producer price index over in the US. Inflation has been a hot topic this last couple of years, and Wednesday brings us the latest snapshot from China, Canada, and over here in the UK. And we'll give our thoughts on CPI here in the UK in a moment. Wednesday also brings us the release of the Fed's January meeting minutes, as well as how retail sales are doing over there in the US, both of which we'll also discuss in detail after this. Finally, Wednesday also brings us the update on industrial production figures, again in the US. On Thursday, we'll hear the latest Australia unemployment figures, the Eurozone economic bulletin, the jobless claims in the US, and inflation over in Japan. And finally, on Friday, we'll hear how our sales figures are faring over here in the UK, and we'll talk about that in more detail afterwards, and the Eurozone consumer confidence numbers. And the companies that we'll hear updates from this week are as follows. Monday brings us Avis over in the US. Tuesday is the turn of mining giant Glencore to release their full year results, which we'll discuss in a moment, and Airbnb. On Wednesday, we'll hear from BHP, Kraft, and Nvidia over in the US. On Thursday, it's the turn of Standard Chartered, Reckitt Benckiser, Aveva, and retailing giant Walmart releases its Q4 results on Thursday, and we'll give our thoughts on that in a moment. And finally, on Friday begins bank reporting season with Q4s coming from NatWest, and we'll discuss this later in the video. And finally, we'll hear from Segro and TSB Bank. Last week, US inflation jumped to 7.5%, and expectations of a more hawkish Fed sent the market on a roller coaster ride. Inflation will remain in focus this week with updates from, amongst others, the UK, China, as well as the latest PPI figures from the US. In addition to inflation, markets will be watching developments around the Russia-Ukraine border following warnings from the US that Russia could invade on Wednesday, which could of course prompt risk-off trading and see oil prices continue to rise. So it could be a momentous week, or not. So let's take a look at some of the big financial stories in this week's diary. Tuesday brings us an update on UK unemployment. Well, the rate of unemployment continued to fall in the 3 months to November to 4.1%, which marked its lowest level since July 2020, but was still slightly above pre-pandemic levels of 3.8%. Interestingly, wage growth slowed slightly to 3.8%, which was below the rate of inflation, putting pressure on households' incomes. The number of payrolls rose by 184,000 in December, yet vacancies were still very high at 1.25 million. The labour market is expected to continue its steady recovery, with the end of the furlough scheme having had little impact. So as a result, do keep an eye on the GB pound and of course the FTSE. Glencore is due to release its full year results on Tuesday. Coal prices have surged to a record high, which have helped Glencore's profits surge. Cobalt, another key area for Glencore, has also been a strong market. As Glencore shifts towards battery metals, disposals will be in focus. At the end of last year, Glencore said there were 10 sales ongoing and 15 more being reviewed, which could pave the way for big dividend payments. Revenues are expected to have jumped 41% to $201 billion, and underlying profits are expected to more than triple to $14.2 billion. UK inflation, as measured by Consumer Price Index, rose 5.4% year-on-year in December, and that's up from 5.1% in November, marking the highest level in 30 years. Following the reading, and in an attempt to rein in surging inflation, the Bank of England raised interest rates in December and again in January to 0.5%. The vote was actually more hawkish than expected, with 4 of the 9 policymakers voting to hike rates to 0.75%. Expectations are for CPI to continue rising in January to 5.5%, and there is a good chance that the Bank of England will also consider tightening monetary policy further. The central bank sees inflation rising to 7.5% in April before it starts to ease lower, so do keep an eye on the pound and the FTSE. Wednesday also brings an update on US retail sales. Now, retail sales in the US fell by a larger than expected 1.9% in December, compared to 0.2% growth in November and 1.8% in October. And this is likely owing to Americans doing their holiday shopping earlier than usual and due to the virus impact in December, when shoppers stayed away from the shops in order to avoid contracting illness. The drop in December could be followed by a solid rebound in January, particularly as the jobs market recovered so firmly in January. So do keep an eye on the US dollars and, of course, the US indices. And finally, on Wednesday, the FOMC released their latest minutes. Well, these minutes relate to the late January Fed meeting, where the Fed, as expected, kept interest rates on hold and monetary policy unchanged. However, in the pursuant press conference, Fed Chair Powell indicated that the Fed was considering hiking interest rates at a much faster clip than originally expected, whilst also shrinking the size of the balance sheet. The Fed is expected to fire that hiking firing gun in March. The minutes could well shed some light on the likelihood of a 25 basis point move versus a 50 basis point rise. Any views on the timetable for reducing the balance sheet will be closely watched. So, of course, do keep an eye on the US dollar and US indices. Walmart is due to release its Q4 results on Thursday. And over the past 2 years, Walmart has benefited from the shift in spending away from services and towards goods. However, there have been problems arising more recently. For example, labour shortages have been a headwind as employees have fallen sick with the virus. Securing products has been another challenge given the ongoing supply chain issues. However, given Walmart's size and purchasing power, it has kept its shelves well stocked. Analysts expected Walmart to report revenues of $151.47 billion and earnings per share of $1.49. And these would represent a slight decline compared to the same period the year before. Walmart's share price has traded relatively range-bound across the past year. Friday brings us the retail sales update here in the UK. Now, retail sales in the UK fell 3.6% in December as the government imposed Plan B restrictions to stem the spread of the virus. These restrictions included working from home, which meant that city centres saw footfall decline significantly, hurting the retail sector and hospitality. Consumer confidence slipped to an 11-year low in January, which doesn't bode well for sales, as COVID restrictions remained in place and inflation shot higher. That said, the British Retail Consortium reported a rebound in sales in January, and if these can be used as a guide, then we could expect some form of recovery in retail sales in January. However, with inflation expected to keep on rising, retail sales may struggle in the coming months. NatWest is the first of the big UK high street banks to report Q4 earnings on Friday. Expectations are for the bank to report broad growth as the first impacts of the Bank of England's interest rate hike start to show through on the balance sheet. Heading into earnings, the bank's share price has rallied 45% over the past 12 months and by 15% in the past 3 months. Dividends will be in focus thanks to increased liquidity. Expectations are for a 7p dividend and a share buyback of £1.2 billion to be announced with the results. Lloyds is expected to report a 30% increase in pre-tax profits to £817 million. Net interest margin expected to be down 2% year-on-year as the key metric is yet to show the recent BOE rate rise. Costs could be in focus with rising labour costs and with IT and digitalisation upgrades. So those were the big stories in detail. Let's wrap up with a look at the dividends due this week. In the FTSE 100, we'll hear from Imperial Brands, Pershing Square Holdings, Shell and BP. And in the FTSE 250, we'll hear from Beazley, Tritax Eurobox, Hypnosis Songs, BlackRock Thogmerton, NCC Group and Murray. So those were the highlights coming up this week. As always, thanks for watching. As always, of course, please don't forget to click on that subscribe button so you don't miss out on any of our regular videos. Also, as always, don't forget our app, which is definitely worth taking a look at if you're keen to keep in touch with the latest market news. So happy Valentine's Day, and until next time from all of us here at Atlantic Capital Markets, have yourself a great week.